While everyone else panics about the coming Trump recession, smart investors are quietly positioning themselves to make a fortune. Economists are forecasting a significantly higher recession probability for 2025 than just months ago, a trend we'll explore further. In this video, I'm going to show you exactly how to turn economic chaos into your biggest financial opportunity yet. These proven methods created millionaires during the 2008 crash. I personally helped clients double their portfolios when others lost everything. Are you ready to learn how the savviest investors actually profit during economic downturns instead of just surviving them? Let's dive into the strategies that can transform uncertainty into wealth. Ever notice how the wealthiest people seem to not just survive economic downturns, but somehow grow their fortunes? It's not random luck or secret insider knowledge. It's their ability to recognize the patterns that create massive wealth transfer opportunities. And right now, we're witnessing the formation of a perfect economic storm that could reshape the financial landscape for years to come. What we're seeing with Trump's tariff policies represents a seismic shift in how our economy functions. The average U.S. tariff rate has exploded from 2 to 3% before the trade war to 30% on all imports, a transformation of our trade dynamics that most Americans aren't prepared for. While headlines focus on short-term pain, smart investors see the bigger picture. Economists predict these policies will trigger the Trump recession of 2025. But economic downturns don't destroy money, they redistribute it. The tariff approach reaches far and wide. The system includes a minimum 10% fee, with additional charges targeting over 50 countries, while existing tariffs on steel, aluminum, and Chinese goods remain in place. This economic shift resembles a weather system that experienced farmers anticipate and prepare for well before others notice storm clouds. JP Morgan analysts calculate these increases function as a $660 billion tax increase on American consumers, money coming directly from average Americans through higher prices on everyday goods. Paul Donovan, chief economist at UBS Global Wealth Management, states, "The U.S. isn't sneezing, the U.S. is hacking off one of its limbs," highlighting the severity of this situation. This potential self-inflicted wound could ripple through every sector of our economy. These policies create a triple threat to economic stability. Tariffs drive up prices, pressuring household budgets. Simultaneously, businesses scale back investments, with growth projections slashed from 3.6% to just 1.2%. This business contraction then triggers plummeting consumer sentiment, creating conditions perfect for wealth transfer from the unprepared to the financially savvy. The 90-day pause on some tariffs, announced in April, actually intensifies uncertainty. Barclays economist Mark Giannoni points out this extended limbo makes business planning nearly impossible when rules might completely change in 3 months. Globally, the EU prepares countermeasures, potentially sparking a broader trade war. This chain reaction could drive inflation while restricting growth, creating the dangerous combination of inflation and economic slowdown simultaneously. The outlook darkens daily. Goldman Sachs downgraded their growth forecast to 1.7%, while the Federal Reserve Bank of Atlanta estimates potential economic contraction. Jonathan Miller at Barclays puts it bluntly, "If all planned tariffs are implemented, then we'll probably get a recession." But opportunity emerges from chaos. This unusual combination creates conditions where certain assets will perform exceptionally while others collapse. The key isn't having millions or special connections. It's understanding these economic shifts before they become obvious, positioning yourself to leverage market dislocations that only exist during these rare transitional periods. Positioning yourself ahead of the crowd is exactly what created thousands of new millionaires during the 2008 housing crash. While headlines focused on foreclosures and bank failures, a quiet revolution was happening as everyday investors purchased deeply discounted properties that would later multiply in value. The smart money wasn't running away from the market. It was running toward specific opportunities that only exist during economic chaos. Consider Sarah, a middle school teacher from Phoenix. While her colleagues watched their retirement accounts plummet, she used her modest savings to purchase 3 foreclosed homes in her neighborhood for almost half their previous value. Within 5 years, those properties had not only recovered, but doubled in value, providing rental income that eventually allowed her to retire early. During the 2008 recession, when most people sold in panic, savvy investors recognized that housing prices had temporarily disconnected from their fundamental value. They acquired properties at steep discounts, often 30 to 40% below their worth. These weren't all wealthy people or real estate moguls. Many were regular folks who simply understood the pattern and positioned themselves accordingly. The recession created a unique environment where competition virtually disappeared. When everyone retreats to safety, the playing field opens for those who recognize opportunity. This pattern has repeated in every major economic downturn throughout history. Recessions don't destroy wealth, they transfer it. Assets change hands from the fearful to the prepared. The key difference between those who lose during recessions and those who gain is understanding which assets become temporarily undervalued. During economic uncertainty, fear drives investors toward perceived safety. This mass exodus creates pricing inefficiencies that don't exist during normal times. These inefficiencies are where fortunes are made, allowing average people to acquire premium assets at accessible prices. What makes the coming Trump recession different from 2008 is its nature, like the difference between a winter blizzard and a summer hurricane. While 2008 was deflationary, dropping prices across most categories, the upcoming recession appears inflationary. Economic data shows inflation projected to rise from 2.4% in March to 3.4% by year's end, according to the Consumer Price Index. This fundamentally changes which assets will perform well. In an inflationary environment, certain sectors benefit while others suffer. The tariff-driven price increases will reshape opportunities across industries. Some will struggle with rising costs and falling demand, while others will thrive as domestic alternatives become competitive against expensive imports. Knowing the difference is crucial for financial protection and wealth creation. The window for positioning yourself is narrowing. As more people recognize the pattern, competition for opportunities will increase. The biggest gains always go to those who move before the crowd. While others debate whether a recession will happen, the smart money is already making strategic moves. The smart money isn't just moving, it's following a precise playbook that traditional financial experts won't tell you about. While the headlines scream about economic doom, a small group of everyday Americans are quietly positioning themselves to potentially profit from market distortions. What's happening now is a rare wealth transfer moment that requires completely different strategies than what most financial advisors recommend. Most financial advice today focuses almost exclusively on defense. Build your emergency fund, pay down debt, cut expenses. These steps are important, but they're only half the equation. If you're only playing defense during this economic shift, you're missing the offensive moves that could actually build wealth. The truly wealthy use recessions to multiply their net worth by recognizing opportunities while everyone else is paralyzed by fear. Trump's tariff policies create predictable market inefficiencies that smart investors can leverage. These inefficiencies work like cracks in a dam. Pressure builds on one side, creating temporary openings where opportunity flows through before the market patches them. When tariffs suddenly make imported goods more expensive, certain domestic businesses gain a competitive edge. Consider what happened with Marcus, a retail arbitrage seller who spotted this pattern early in previous tariff cycles. He identified categories where imports would become costlier, bought domestic alternatives in bulk, and saw his side business triple during the market adjustment period. Looking at history, specific assets tend to perform well during these economic conditions. Domestic manufacturing stocks benefiting from tariff protection. Precious metals serving as inflation hedges. Consumer staples companies with strong pricing power. Timing is critical. The biggest gains go to those who position themselves during the uncertainty phase, right now, not after the recession becomes official. Smart money acts on early signals and positions accordingly. What makes this coming recession unique is the combination of high inflation alongside economic slowdown. This environment favors tangible assets and businesses that provide essential services regardless of economic conditions. Certain side hustles thrive during downturns. Debt collection services see increased demand. Home repair businesses boom as homeowners opt to fix rather than replace. Discount retail arbitrage becomes more profitable. Financial consulting grows as people scramble to adjust strategies. Practical steps to take now. 1. Consider liquidating vulnerable assets that historically perform poorly during inflationary recessions. 2. Build a strategic cash position to deploy when specific market triggers indicate buying opportunities. 3. Start building recession-resistant income streams before competition increases. The biggest mistake most people make is waiting until the recession is obvious to everyone. By then, assets will have already repriced, and the window for positioning will have narrowed significantly. The media will announce we're officially in a recession only after months of confirmation, by which point the smartest moves will have already been made. Let me make this crystal clear. We're standing at the edge of a wealth transfer moment that could change your financial future forever. The window to act is right now, not after the recession headlines hit. Remember what happened when Trump announced that 90-day tariff pause? The market surged instantly. That's your proof that positioning yourself before official announcements yields the biggest rewards. While everyone else freezes with uncertainty, your job is to diversify your portfolio. As financial expert Gina Bolvin advises, you need investments that can weather the storm in good times or bad. The opportunity is here. Seize it and secure your financial future.